Bitcoin's run-up since December of 2022 has been entirely based on the idea that institutional investors are adopting Bitcoin as a new asset class. The launch of the Bitcoin ETF in November sparked immediate optimism around crypto, and Bitcoin is still up about 85% since the ETF's launch. In our view, Bitcoin's adoption as an asset class is no different to gold's adoption as an asset class in the early 2000s. The first United States gold ETF that allowed institutional money to invest into gold was launched in November of 2004. This marked the beginning of a major bull market in gold prices that rose by about 400% from that moment on. But as you can see, this didn't happen overnight. The rise in gold prices was quite gradual, with multiple pullbacks along the way. In fact, if we overlay gold's bull market from the early 2000s on top of Bitcoin's current bull market, the two don't look all that different. So although this pullback that we're seeing on Bitcoin might look dangerous and feel very painful to people that were overextended on the crypto trade, for now it doesn't seem like it derails this overall theme of Bitcoin institutional adoption. If money continues to flow into this asset class like money flowed into gold in the early 2000s, it could be that this dip proves to be a significant buying opportunity for Bitcoin. One of the ways we can see whether that's happening is by looking at the activity on Bitcoin's network, or in other words, the number of transactions that are being made on the Bitcoin network. This is what the number of transactions on the Bitcoin network looks like going back to 2009, and when we overlay the price of Bitcoin on top, we see the two are very naturally interconnected. Over time, the number of transactions on the Bitcoin network has increased as more investors have been joining in, and that has generally been accompanied with a rising Bitcoin price. In fact, we can see more specifically between early 2023 and late 2024, the number of transactions on the Bitcoin network rose, and that was also generally accompanied with a rising Bitcoin price. More recently, however, the activity on the Bitcoin network has dropped, and you could argue that that hasn't helped in the recent correction. So if we're betting long on Bitcoin today, we really want to see activity on the network pick back up again. Well, that's where we come back to this crypto strategic reserve. One could argue that this could lead to another pickup in interest on Bitcoin. For instance, if you look at what happened following the Bitcoin ETF launch, that did spark some interest in the Bitcoin network. So despite this false breakout on Bitcoin, we do remain quite bullish on Bitcoin in 2025 from a fundamental standpoint.